Hello, guys. Hello. So, what a tough day. Last 3 days, I would say. Didn't sleep much. You see, quite present in in the market updates. Wanted to give you as much overview as I can during those times. I tough period for many. I would not expect honestly market would so much overreact to Jerome Powell's hawkish stance. I've been already telling you what market had in the dot plot and what market is actually pricing right trader perspective. This is not aligned, right? I told you I don't see that there is understanding there will be less number of cuts next year. And obviously, we can say market maker used it, or there was a real sell-off. Either or, I would say the sell-off was quite real. Just simply looking at weeks, you saw yourself that volatility index has spiked 75+% in a matter of a day. You remember we opened SQQQ short position very rapidly. We closed it at my target. I didn't want to keep it also in the market because after those long days, very often you don't know if market would reverse or not. But I wanted to tell you the volatility index spike or weeks spike. 1 second. Wait, sound is not stable. I had a comment. Let me. Maybe I have too many things running in parallel because I am still projecting all the indicators. I hope that's better now, guys. If anyone gonna experience an issue or cut with the sound, please let me know in the chat and then continue. So weeks volatility index. Let's have a look quickly here on trading view. You remember volatility index is the ratio between puts and calls in the system. So the fact has been spiking so rapidly indicated that market participants have started to purchase the huge puts to hedge themselves versus the further market drop. And so you need to understand when the market participants are buying puts, what market maker is doing, they are selling puts. So they're going negative. They're selling put and they need to stay delta neutral. So when they are short put, it means they have a long position. So if they want to become delta neutral, they need to sell underlying asset or whatever would make them delta neutral with that case to the market. That adds the selling pressure on the market, and that's why those weeks spikes, they can be very drastic. They can bring a lot of trouble to the market just because things start to go non-linear. I emphasized it several times. So once again, just let's go outside of weeks. Let's just take a normal thing, a classical thing. I wanted you to understand this idea behind the gamma squeeze or how things are working in the market. So you, for example, you want to have a long exposure to Tesla. You think Tesla is going to $1,000 in a year, but you don't want to buy here because it's a little bit too late. You think I'm like not sure. Maybe it's gonna go down a lot. So instead of that, you sell a cash secured put for 340, right? So you are selling the put, and who buys that put? A market maker buys that put. So market maker is purchasing the put. Market makers are making money from arbitrage, from actually providing the liquidity to the market. So market maker, to protect themselves, having a put contract, they need to buy underlying 100 stocks of Tesla because one put represents 100 stocks. So market maker is purchasing Tesla stocks for you selling puts, and that pushes the market forward. So there is a certain term in the market called gamma squeeze. When there is a huge number of put contracts being sold, the market maker is being forced to basically purchase the underlying stock, and that pushes the market even forward, right? So I'm explaining that. We're not going to cover Tesla today. I don't think Tesla is relevant. But what's important is that you need to understand that those changes, especially changes related to option contracts, can have a tremendous effect on the market, and especially volatility index, because it's very often observed as the sentiment of the market across big range, institutions, funds, and so on, right? So of course that was a tough market overreacted, right? So important lesson. I saw a lot of course, emotions in the charts in the last 2 days. I understand everything, but please, markets daily for years and years, thousands of days I spent on the markets in front of the charts. I can tell you, you don't need to overreact on the open market. So all the people who were selling their minor stock position when Bitcoin expecting, well, the people were expecting that they're gonna sell it and then buy $2 lower because we're gonna wick into 89K, and now they're gonna sell at 93 and then they're gonna buy back at 89. Guys, those weeks, they last for sometimes 5 minutes, sometimes even 15 seconds. You can only enter them in the limit. Very often it's impossible to enter them on the market. So for the corresponding assets, features, for example, Marathon Digital Holding, what do you expect when you are selling the bottom? This is not something you need to do. You always need to let the market react, let the market open New York Stock Exchange. And especially today, we have the PCE data. And obviously, now we're going to speak about those in a second, but PCE data can provide a huge relief from here. So you wait for PC to come, and then you wait for the market to react to this PC. And only then, if you decide to cut your loss, that's okay, of course. I'm not telling you, to never sell anything. I'm actually saying, if we see that the train has changed or macro regime has changed, we need to cut the losers. But I think that was not the situation where you cut your losers, speaking about Bitcoin miners and speaking about silver miners. So now I spoke for a lot. Let's go into the charts. It's going to be much easier. And I'd like to start actually with GDX here, because gold miners, in my opinion, they provide a very strong support. They're sitting on this volume shelf. Volume shelf is something I really recommend to use. The indicator is called RVP, Volume Range Visible Profile. You can write it down. The RVP is this indicator you see on the right. You see at which levels. At the level of around 34, there has been or visible range, meaning buyers stepping in here to support the price. First there was a resistance, holding. So I would expect this zone to act out of the zone of support. That's why I do not recommend, and I would never sell any exposure to a precious metal at this current level. And I honestly, to a large probability, like I'm looking now into gold. I understand something super important. I want to let you know, gold and silver are extremely manipulated markets, right? So when I'm telling you about London vaults, what BlackRock is doing, honestly, it's completely criminal what they're doing, right? But the thing is, we know that those things are going to, and they're going to break thanks to the Eastern countries, and thanks to industrial use of silver. And so when they're going to break, the banks will be forced to close, to cover the tremendous short positions, and that will be the moment where gold and silver can in a day very easily. Silver can do also several dollars in a day. There's a lot of pain in the comments, and I wanted to address that, right? So first of all, before we go into psychological aspects, I wanted to let you know, I don't like these diagonal lines, as you know, because there are so many ways how you can draw them. But as I said, commodity markets, it's all for the presence of market makers. Before market makers understood that most of the people look at this chart in a similar manner, so they can run certain narratives to get people out. They would make you believe we lose this triangle, and then you would start short selling, and then they would basically create this manipulation and bring the price back. Commodities markets do not operate exactly like that. This is not crypto. So very often things actually work here in a much more simple fashion, especially with the bigger asset classes like, when we spoke about palladium or gold or silver. Those lines very often actually have meaning comparing to altcoins, for example. So here, what I wanted to say, any trouble situation to happen while we are holding it. I also look at the fundamental chart, which is very important for me, which is gold to silver. And I see that clearly that fear has been caused by Jerome Powell. Obviously, we overshot here because you need to understand there is a certain amount of money in the system. There is a certain liquidity in the system. People are not just gonna sell their stocks into nothing. They can sell it into dollars. They can sell it into precious metals. They can sell it into the bonds. T-bills, but are they really going to see it in bonds right now when inflation fears are so high? And I don't think so. Bonds, every macro investor understands that bonds are performing very, very bad in an inflationary environment because, you're getting 4%, 4.5%, but then inflation is eating 3.5%. So why would you even sit there? You don't have any flexibility. So they're either going to sell their stocks in case they're fearful. They're going to sell them into dollars. And that's why dollar were spiking so much, the dollar strength. You see how much also investors were allocating more money to dollar because dollar provides much better yields right now than, for example, the British gilts or the bonds they call gilts in the UK or the Eurobond, the German bonds, right? So of course people want to stay in dollar for that reason much more than they want to stay in other currencies. But what they really seek as an exposure, they'd rather would go in a long run to gold if we are entering the recessionary environment, because in a recessionary environment, government needs to print more money to support people who lose the jobs. So they start creating stimulus checks. They start to give all these things like we see in the US and the COVID, 1,600 per month or one-off, doesn't matter. But this money are flying into economy, and as asset holders are benefiting from that. So they are basically making rich people more rich, and they're letting the poor people barely survive months to months. But this is the reason why during these recessionary environments or during these periods, let's say, of money printing or asset inflation, the people who benefit the most are the rich people. So that's unfortunate, and that's why we need to be very vigilant, understand what happens in the macro world, and make a difference. And that's why I emphasize once again, the silver bull run will be a difference you can make into your life. So don't get shaken out just yet. First of all, because gold to silver is an historically super, super high level. Everything around 90, as you remember, this is like a top fundamentally, but also top technically. So please, no need to be fearful here, because now gold holds the triangle, and gold is so much more expensive than silver. It's exactly like Bitcoin and Ethereum. If Bitcoin runs to 100K, Ethereum doesn't move. And people start selling the Ethereum into Bitcoin, and then the liquidity starts to flow from Bitcoin to Ethereum. It's a very similar picture. You have a big asset class, you have something like gold with $12 trillion in there, and then you have something small like silver with 1.5 or 1.9. So obviously it's much easier for silver to get inflated through the gold money, through the surplus of gold money that has been allocated there. And now you see how we're rejecting already today. And you see what kind of rejections in the past from that level were providing us 6% here, were providing us 9% here, and hopefully going to provide us at least 5% here, 5.8, sorry, percent here level, right? And that's why looking at the silver chart today, I absolutely happy about this. Nothing that came out surprise. We have also members in the chat that were indicating that silver is due for a bounce. Wherever tools you use, Are you more fundamental, and I share all my fundamental analysis, of course, or you're just more technical? You're trading based on the ciphers, based on the patterns, based on the Elliott waves. You might not know nothing about silver. You might know nothing about its industrial use. You might have absolutely zero fundamental knowledge of this asset class, but you just still trade as you would trade any chart. And our RSI below 10, you know this is not the time to sell, this is the time to buy, just because there are so many institutions, there are so many scalp traders, there's so many algas that will use this as an opportunity for a quick hedge. Now the question comes at the quick scalps, or just to make 5%, 3%, on this oversold, over fearful drop. Now the questions, of course, stay if we can close above the $30 line, this red line, our PO3, the power of 3, that will be our deviation, and then we would continue. But also being realistic with you guys, knowing that it's a Christmas, there is not so much trades happening. A lot of fund managers are really looking forward to close today, spend the Christmas with their families. And so I basically do not expect that we're going to but if it doesn't happen, don't worry, because then we're going to continue a slight bleed, we can call it this way, into the better outlook for silver. So sorry guys if the video is a bit laggy. Most important is that the voice is good and you understand what I'm saying. I don't know, maybe it's some YouTube issue today or something. So I want also to give you just a conclusion. Please don't get shaken out of silver. As I said, I know it sounds not really convincing here, especially if you entered full on, you didn't DCA and you just saw me and you saw maybe my YouTube video from April, and you just thought, okay, we are breaking out. Next target is what Ross been speaking about, 40s. And I am not exposed at all. I want to get exposed. So you entered here. It can be extremely painful for you right now. So that's okay. I don't recommend you to close. I recommend you just to stop watching your silver portfolio every day. The world is 100% certain, but I don't see the macro environmental scenario. Either we're going to get in a recession, or either we're going to get into Goldilocks, or either we're going to go into war with China, or because of Taiwan, or whatever. Semiconductors will be hit. Silver is going to benefit, So yes, Nvidia would drop. Yes, Micron would drop. Yes, AMD would have troubles, but silver would not have troubles, even in those very horrible scenarios that I hope we don't need to live through. I really don't want to have a war, but also metals are behaving very well in this environment. And it can happen. The miners, because they're stocks, they're equities, they might experience a tiny drop too, but that's not what you need to worry about. That's all right, because very quickly they're going to reprice based on the underlying asset class. So if you worry that your position is going to slightly be at a loss and you don't want to stomach it, I understand everyone has different risk appetite, everyone has different risk profile, but then please DCA, or you can always, I don't recommend it, but you can always, for example, have your larger collateral in your portfolio in underlying metal, and then you can add the miners slightly on top of it. So maybe you're 120% exposed or something like that, but not now. Like I don't recommend entering margin right now. If we really go and there is a moment when we go to silver 28, yes, then as of today. Okay, so I think it's clear with the precious metals. Like I think also, any miners that we discussed, like Sibanye Stillwater or whatever, well, they are of course not in a very good zones, but this is the value zone. This is something that we drop so much on that sell-off event. I purposefully don't go right now into RSIs and all of other charts, other oscillators, We just focus on a price action for now, but trust me, you would see it yourself. The RSI on 4 hour is extremely oversold, and this is not where you sell. This is exactly opposite where you buy. And for that reason, I understand some people are a little bit more experienced, some people are quite experienced, some people are not experienced at all. So when they see the ticker and they read good fundamentals around it, for example, Warren Buffett was buying something, they're like, okay, I want to be there too. They open the chart, and they see RSI is at 80, and they don't really care about it. They just buy the entire position as of today, and then tomorrow RSI corrects, it goes down to, they panic, they think their thesis is wrong, and they sell. So they create those buys and sells all the time, and it's how most of the retail people think, not because they're bad, but because that's how our brain is wired. We are, our brain is made to protect us from the bad circumstances, but you need to separate that brain from the brain that makes investment decisions. Daniel Kahneman has a very good book, Fast Mind, Slow Mind. I think many of you have heard of it. The brain that prevents you from tiger, and the brain that makes you investment decision and buying the real estate, acquiring a real estate object, should not be and should not be operated from the same decision-making center, right? So maybe go here, like you see my chart right now. I am, for example, on Solana chart. I'm here on the bottom right quadrant. I am on the Solana chart, and I want to buy. I think it's breaking out here, and okay, but I know I have a bias. So if I open my RSI chart and I see, okay, I like it, but for example, we are on RSI here at 85, I need to give it some time. But I still don't want to fully miss this move. So I can just create, 5 bits going tiny bit down. How far down? Well, for people who watch the webinars with Tony, etc., you can look at the vector candles. You can look in the order blocks. We're going to cover all the order blocks a little bit in between. Or you can just do it very simple. You go on a daily. You open your RSI rules. When you are above this yellow line of 70, you don't buy. You wait for it to retrace. When you're below 30, you never sell. You wait for it to bounce. And of course, in the parabolic uptrends, when things go up and down, RSI can stay long overbought and long oversold. But overall, is if you see that it's harder for you to stomach those losses when you impulsively buy, then put yourself a rule. I DCA, I only enter 15% at a time, and then whatever happens, if I miss this trade, well, then I'm going to go somewhere else. Don't worry. Then Russ would let me know when there is uranium good momentum, because but once there is a good uranium momentum, I will rather put there, because I kind of late a little bit to the move, because RSI is close to 80. So let it calm down, and if it calms down, gives me a better buy. If it never calms down and silver goes to 48 from here, well, I'm not gonna FOMO. I'm gonna keep this chunk of money a little bit aside and put it into something else. So let's speak about crypto. I know it's also super important, and I already spent half an hour talking of precious metal. But guys, it's super important that you don't sell anything here. I know I speak like a broken record about it, but I go into the charts. I read all the charts every day. Sometimes I'm like at 3 a.m. in a bed. I take my phone, I read the chart, and I see that the sentiment is very negative. And I have a couple of friends of mine. They're like old school guys. They are, let's say, wealthy enough to be exposed to markets, but they are basically like newspaper headliner traders. So the worst. I know when Bitcoin is about to bottom, I would get an SMS or a WhatsApp message from one of them saying, shall we sell here? Like, it's happened today. I'm laughing about it. But at $92, the guy sent me a message, shall I sell everything? And within 5 minutes time, we started to print the reversal, right? And, I understand you might not see all the volume shelves. You might not see where VWAP sits, volume weighted average profile. You might not see a point of controls or any other things, because you're just starting your journey. You don't have all this information. But just look at RSI, and if you are sitting on an hourly RSI at 20, and on top of that, you extended your Bollinger Band, sooner or later, the bounce would come, and the bounce would bring you to higher where you are. But this pain of next 15 minutes, yes, you need to bear. You need to bear it, and not look at the number of your portfolio balance within those 15 minutes of the liquidation event. Because otherwise, you're gonna sell in the very bottom, like that friend of mine who always reads the news and newsletter, and based on that, he takes his decisions. This is exactly why we have people like Jim Cramer. That's exactly why we have all these Forbes articles. They're basically telling you to buy Bitcoin at $105,000. That's why you have this push notifications sent to you by your broker. Coinbase or CoinGecko or CoinMarketCap says Ethereum just spiked 11% up, time to buy. And that's what makes the retail sentiment. That's why people click on those push notifications. They go and they become the exit liquidity for the market makers. So please, if it's too complicated right now to understand all the complexity of how things work, just make a simple rule: high RSI, I do not buy; low RSI, I do not sell. So let things settle, and you take your decision in the middle within these two yellow bands. You can just add them yourself, or you can go into the settings, and you can create at 30 and 70, or you can even create at 20 and 80 if you're a little bit more risky, but I would recommend 30, 70 is okay. So crypto right now, I think it will be better for us to go into this browser window of mine, where you could see my and sorry, my trading light. So you see that the cumulative volume delta, it's on Coinbase. He has been pushing Bitcoin up in a bottom left corner. You see those stack blocks there? You see here, we've been actively pushed up by the spot buys, and the spot buys are good buys, so to say. That's the buys, this Coinbase healthy premium. And what I wanted to explain, because I understand some people didn't understand my message into market updates. So here we have the price, we have the Bitcoin price, and the price trajectory, it's clear, it's up. And at the same time, the cumulative volume delta for both red and blue is spot and red is also up. So it means that basically there are intention to be long, but at the same time the open interest is going down. So what happens when CVD is going up and open interest is going down? What keeps happening is that all the people who went long here, you see, there were enough longs are closing, and I would say shorts are closing too, but longs are closing at a higher rate, supported by the spot buying CVD. So this Bitcoin move is already done, because while we're going to have that picture with spot supporting the buys and longs are getting out, the longs would start to get in a little bit later. That's the reason why I went long. I did not enter everything in exact bottom. I start adding it when I was saying, I was looking here on Trading Light, and I saw those zones where a lot of beats were placed. When I saw, okay, there is a buy wall. Let me see what's going to happen with that buy wall. I posted a couple of times a screenshot, and I see, okay, you can buy. It's lost. I can sell $50 less, $100 less, because then I see my next buy wall is $1,000 less. I don't want to go for the entire $1,000, but then I saw there's another buy wall, and we were both 93 and 92. Some of my 92 I were not filled, just because also there are more people who front run this. You see, we exactly filled at 92, but that's okay, because 93 buys were also giving me a very nice exposure to the upcoming upside move. And I also thought, okay, there is also a probability that if we lose that range, then we can definitely weak. I know there, Jay in the comments, for example, they were saying he's waiting for the week. And I know that many people were waiting for the week, and that's exactly why week didn't happen, because a lot of people, they only had their beats. Everywhere I saw on crypto Twitter, everyone was saying 88 or 90K. That's where they're going to beat. Now, the market maker is having an insight or expecting a positive PCE. Do you think he's going to let you feel your beats because price is going to go now above 100K? No, of course not. It's not going to give you this week. So you have to start scaling in a little bit earlier. And that's why I'm emphasizing that you should use either Bybit or Tillstraight. And you, in my opinion, need to learn how you can scale. This is an example. To have a lot of Arbitrum, but I was like, my thinking was following, if that's the bottom, and I don't know if it's the bottom or not until I have a market structure break. But what if I'm wrong? Well, in this case, I can set up those beats, and some of them will be filled, and some of them would not. But if I'm wrong and we're gonna reverse back, then to this point, I see we creating a new low, and my average entry price will be somewhere here, around 0.7. So I don't mind cutting it 2 cents lower, because I didn't try to predict the exact bottom. But let's see how overextended. Guys, just double checking. When I was moving between the screens, like cumulative volume delta, you were able to see CVD raising, etc. I just wanted to double check if I shared my screen properly, because I wanted to show you. You're able to see that type. Please let me know if you were not able to see that, and then I will repeat, because I want you to understand how the things were going on here. That's quite important. Please. Okay, apologize for that. Then I would explain it once again, and then we can cut it from the here. It's so right now we are at Coin Analyze, and Coin Analyze gives us the picture that here Bitcoin was the price started to bounce, and at the same time you see CVD or cumulative behind, basically all cumulative volume delta. If someone does know, is a way basically calculation of volume based on the direction of based on negative or positive direction, based on what was an active order in the system. So when cumulative volume delta is raising, is positive, it means that there is a buyer's intention behind. But on the other side, you see this open interest was going down. So what I wanted to tell you is that I saw a kind of interesting picture here. So blue line is spot and red line is derivatives. And I see that price is going up and the open interest is closed. It's probably because all the people into the PTSD mode, because they were long here, and then it created market structure break, but then it pushed them down. They went long here, it created a little market structure break and pushed them down for the last 2 days on every pump. And what often happened, they thought, okay, it's over. They went here, creates a little retrace. And what you see, what's so interesting, why market so many people here? Because that created a higher high. That was a higher high comparing to this. So people thought, okay, finally it's going to do something like that, and they were going long. And so by the time where we actually bottomed, there was so much of trauma, there was so much of liquidations, there was so many billions of dollars wiped out. The blue line, this like blue line here, this blue slope is positive. On the same on the same side, the open interest is negative, meaning everyone is closing their longs who were still exposed to longs, because people don't believe that's actually the bottom. That's something I wanted to explain to you. It might not be that might not be very simple, because it's a little bit more advanced than actually spotting double formation and so. But now I gotta go into the chart of Bitcoin. We're gonna see where I think. So now we're back to trading view. There should be no problem. Just a second. All right. So just making chart between indicators. So first of all, what do we see? Knowing how I look at the chart, probably the first thing they would see here is a potentiality for point of 3. If we are, then probably we're going to come and at least reclaim the fair value gap here, our FVG, just to take all the stop losses of all these people who were already traumatized and who started to short from here. After they tried to long here, they tried to long here, then they changed their bias. They're like, okay, that shit really goes down right now, goes down to 85K. So they start shorting here. Now we want to take stop losses of those people, and potentially also to take all this air, all this emptiness, because market doesn't like inefficiency. I've been telling you many times, market doesn't like inefficiency, meaning for market maker, this move happened too fast. So for example, everyone who went short here, market maker couldn't rebalance their position, and that forced them to go long. So now they want to come back and to recap their long, because they've been long all the way down. So market maker also doesn't want to lose the money. So now they want to come here to this point of inefficiency. So looking at this chart, you can already start looking at two things, right? The PO3 setups and inefficiencies of these fair value gaps. They're acting like magnets, right? But before we're gonna look for this fair value gap, of course, we want to start accepting into this level, which was 95.8. Let's mark it on the chart. Maybe 96. 96 will be more precise. And then I'm looking at this level too, somewhere around 97.8 or 98. This is our micro zone of resistance. I don't expect that we're just gonna go there and push through the things I showed you right now in cumulative volume delta and all these charts. That might be too fast, too quick, right? Market probably wants to retrace it, balance here, and move forward. But what I want to say, guys, either we're gonna come and get back to the weekend. I don't think that these huge bottoms are formed in a matter of a day. It might be a long, boring chop into the entirety of Christmas, especially if people get overexcited today and they start. If we start accepting above 98, then I would consider. Then market actually now gonna start looking for shorts, to attack the shorts rather than to attack the longs. And it was already a good wipeout. So I want us to accept above that micro range and any of the altcoins. I don't know which one to take. Let's start, for example, with Injective. Why Injective? Because I saw a lot of people were buying it. I saw also that particular market structure where we just went down all the way, and what to do with this right now, because that's taken, that's taken, that's taken. This is quite good, but we also kind of hanging here on the cliff. You know, this is not like a hammer candle or something from the first look. But that's why I actually recommend you to start always not looking for fair value gaps or point of threes. Always start just with a simple, boring thing, identifying your supply and demand zones, and you just start placing the lines where the body of the candle finishes. So you're going to have one line here, you're going to have a line somewhere here, because there's a few here, right? And you're going to have obviously a line here on the top, and so on, right? You spend 5 minutes on that, and you would see how often those lines are respected. How often those lines are respected on a week by week basis. And then you might have those fat lines for your weekly. We're going to have also a line here, and we're also going to have like a line here. So those ones are the main ones I spotted right now, and one here. You see here, yeah, one here. And then you can do, for example, more thin lines. You just go on a daily, and then you start seeing, okay, actually we tapped into the previous zone, and now we kind of retraced back. We did a nice retrace of 12% up. What I want to see for me to become more bullish, I want closes into the upper range, and then my invalidation will be again acceptance below, which I would understand within 1% if we are coming here or not, or my play is next 16% and just playing it level by level. Instead of reading some fundamentals that at some point injective needs to say that, please rather play it for yourself level by level, instead of trying to see what are the most fundamental problem of the world that this project is trying to resolve. Because obviously there is a lot of liquidity factors you might not consider. What are the stakeholders doing in the project? What are the unlocks? What are from which levels the venture capital funds have entered, and so on and so forth. So playing it level by level would always work. Otherwise, you are getting too much of a bias here. So right now, just to emphasize, longing it just yet. I want first to accept it a little bit higher, and then this is giving me a confirmation to move forward. Meanwhile, just looking at, let's take another example. For example, Dodge. I also know that Dodge suffered a lot, and a lot of people are fundamentally bullish on Dodge because of the whole thing around Department of Governmental Efficiency and Elon Musk and so on and so forth. So, Dodge, I trade Dodge for a long time. So I traded Dodge a couple years ago, accumulated in the lower levels. But now if you're looking in the current levels, that also doesn't give us here. It sounds like somewhere in the middle. So I'm not a big fan of just longing 200-day moving average, because you've seen, guys, I just showed you how liquidity is distributed. The Dodge is not just gonna have liquidity because there's 200-day moving average there. Yes, there can come some beats, and then we can go into the trading light and see what those beats are. But mostly those beats are situated on a horizontal level by level basis. So I, for example, will be very comfortable to beat Dodge here, but I'm also quite unsure that we're gonna get that level, right? So when I'm looking at currently on this level, I only see, well, we don't have history in the past, because that will be a coin like Compound or like Aave or something from DeFi that was much, much more expensive where it is right than where it is right now. We're gonna have those history from the past. But Dodge, actually Dodge also has a bit of history. So I would go to those levels. Actually, and we have like a little, a few weekly candles closures here. So that's, but back in the days, there was a lot of volume transacted around that level. Those levels, you see those wicks tapping into here, that already can act as a nice line of support or resistance for Dodge. And once again, those line is never just a thin line, because I would say here it's much better to put it slightly more high. That coincides here actually. Normally this line can be 1% width, of the Dodge price. I don't expect this line to be like 1 pixel, because that's also not realistic, because price it's almost like a living organism. It's never as thin as just 1 pixel. There can be some deviations of fluctuation. That's what you see on a 5-minute time frame. When you go into those kind of charts, you see there's always some deviations that happen based on macroeconomical things. Dollar falling down. Actually, good to see dollar falling down. It also affects Doge price, and that go 5% up or down, much beyond what Bitcoin would do. So we have that zone here. And in order for me to understand what is good for me, I might go on the daily. I might go on 4-hourly. I might see where I'd like to long, assuming that this zone has held. And here I'm looking on the 4-hourly, and I'm so far not happy, because we are rejecting from our previous smaller range. You see, now I formed bigger ranges. I saw that the bigger range has formed. The candle immediately reversed, but it's hard for us to accept in the previous range. And so if I'm thinking from the PO3 perspective, and our economical environment is not safe right now, instead of trying to scalp everything here, of course you can, but then be aware you need to be experienced. Otherwise, it's a high risk of just being liquidated or losing your position. I'd rather wait for here. Similar way how I was doing one of the trading educational videos, how we have it with the ranges, with the 80. Want it to reclaim your range low, and then you can target your range high. And right now, I understand you would say, well, this is not so interesting because this is only 5.75%, but this is much more. Yes, if you were on the screens and you were able to catch this reversal, and how you can catch this reversal, you just go on a lower time frame. So you go on, instead of 4 hour, you go on a 15 minutes, and you guys basically look on the same structure. You see this tiny deviation here. You don't want to risk it, but then you see Dodge is accepting it at this trade already can be here, targeting the upper band of the range, 5.39%, and you're still on 15 minutes. And then you take a little TP1 here, and then you let the rest run. And now Dodge gives you another retest of this range, which was here before, which is also good. So you take your TP1 here, you take your TP2 here, and you assume maybe it's going to do, maybe not, and you just put the stop and break even. Maybe it's going to do something like that. And in this case, it will be a market structure break. Or maybe this remainder, 1/3, is going to actually come down and close at break even. There's no golden rule to say, oh, you have to close all three, because that depends on many factors. That depends on what Bitcoin is going to do. That depends what stocks, how the stock's going to close today. That depends on the dollar, on the yields, and so on. So of course, your third part, it's nice to have, but you can also just close it when it's not reclaiming the upper range, and you're like, okay, I let it close around TP2. I don't need the TP3. It was good bounce. I want to have a peaceful weekend. It's Saturday, Sunday. I don't want to be on the screens. It's okay. So you see an idea how I would look at all this crypto bounces and crypto situations. There is no need to go on Twitter. You can just draw the lines and simply, calmly act level by level. So what about SUI? Looks like it went up a lot fast from 3.5 to 4.6. Yes, SUI was one of the faster recovering ones today. Once again, I was focusing today on Bitcoin because everything else is synchronized. I didn't want to give a lot of trades. I already saw people are panicking a lot. People were selling their Bitcoin miners in a pre-market. People were telling me, shall I sell all my holdings? I only told you guys I am not happy with the risk reward here that NASDAQ is going to provide. Even though we're going to bounce today 3-4%, we might not create a higher high from there onwards. So I've been saying, if you really need more cash and you want to take some profits, it rather should come from the bigger indexes. We are not yet done. We are not yet done with Bitcoin. We didn't have the parabolic blow off top. I think that would come. That's why my targets are at least 120, 130. We are not yet done with Ethereum. I think Ethereum would definitely be at around 7% of Bitcoin or 6% of Bitcoin. But it's not here. It's not at 3,000. It's neither at 4,000. Can we week below 3,000 around New? Yes, we can. It's out of it's not 0% probability, depending on how we close today. But I also think that very probable that Ethereum will be towards at least 4,800 once we 100 above this resistance. So you see, okay, now coming back to SUI, we had the tap into this previous range highlighted in yellow, this range, and we quickly reclaimed it. So SUI can be an example of one of the altcoins that recovered fastest. So once again, you did not have to be a hero and long it here, because there was no weak, there was no bottom information. It's enough. It's enough to take it from acceptance into. Again, it's very often that people think, okay, I need to be from the very bottom to the very top of everything. And if I'm going to sell my NASDAQ 2% below, that it's actually going to top before it goes 30% down, I'm going to hate myself for the rest of the life. No, guys, that's not how it works. You need to catch the main meat of the move. Either it's going to be 50%, 60%, 80%, it doesn't matter. Something moves all the time. There will be another mover. What you need to do is to make sure that your move is probable. Very highly probable. So for some deviation to happen like that, and for us to accept into that range, as I said, you know it already, that we're gonna cover now the upper band of the range, and we're gonna move from this 8% from 3.9 to 4.2, 4.18, and that's what happens afterwards. You take your TP1 and you see, okay, let me give it another. You go on the small time frame. You see that looks like a vertical accumulation. How do I know those? We're going to have a separate webinar on that, but I can tell you already, when I look at those candles, I call it demand anticipation. Up, up. It looks, this is a vertical accumulation. So having the vertical accumulation around resistance gives me quite a clear picture. So I'm just gonna take my TP1, or maybe even half of the TP1, and I'm gonna let it run. How far? Well, I'm gonna zoom out. I'm gonna mark my resistances. I see one resistance is around here, around this zone. That's from here, right? That was our initial one. And then another one is gonna be at this zone. So, and you see actually on the right, but that's exactly where we tapped. Actually, at this point, I will just take profit, because I know we can actually come and take this week and this week and this week, but it's also, does it really worth for me to worry what's going to happen? Because very probable that we're going to retest there is range low, and so I would rather re-enter on the definitive acceptance above, then I would see it and worry and check my position for the next 48 hours into the weekend, what SUI is going to do, because it also can come and reverse this entire move. This is also potentially probable. So now I think I explained how SUI was doing. Now let's look at FTM, where the issue with the sound comes from. I hope. I mean, I'm sorry if it comes from my end, but it's exactly the same setup I'm recording, and normally it always works fine. The mic is also fine. Let's look at FTM. Okay, you see how different the picture is here? But before I even go on 4 hour, I need to look at the daily, right? The same way it looks a bit horrible, like Dodge, but not so horrible, because we have just retested this previous level of 84 cents, and we were able to bounce very strongly, right? When we spoke today about a bit about overbought, oversold, right? If I would just go here on my daily RSI, I would open this chart. And you've seen this chart many times also from Tony. Why I like this chart more? Because it has the Bollinger Bands, it has the expansion for the RSI. So RSI on the daily went down too quick. And what happens when RSI goes down too quick? Well, it normally comes back within the range, unless it just starts to bleed, bleed, bleed. It can also happen, and then your band would go like that. So it's not for certain that just because RSI went down too quick, now price need to go up. No, price doesn't own anything to anyone. If we're gonna go right now in a black swan event and the war would start, Phantom can also go to 15 cents and no one would care. But it's a little bit of outside of probability ranges. So when you see situations like that, okay, give it a bit more time, and then you go on 4-hour. And what you see on 4-hour, oh wow, on 4-hour, you're also way beyond Bollinger Band. And on top of that, you are below our 30 range on RSI. You go on 1 hour and you see there, wow, you're like even at 25. So yeah, definitely in this couple hours, give it the time to come back. Don't sell at this point. Think opposite. You want to sell because everything goes down. Now you need to rewire and you need to start off buying, because that's exactly why I was bringing you this RSI at the first place as an example. I hope that helps. You can go also on 15 minutes. Even you see, guys, okay, then the smallest time frame, 15-minute time frame, that's probably where your RSI button. So that's an imminent, most common place for reversal. But then we also have it here. So how would you know? Divergences, right? And that's why we have this idea of bullish divergence. The RSI and price, they are getting divergent. So RSI, for example, is price is going down, but RSI is not able to go down anymore, right? That's why you see here on my indicator so many divergent highlights. That's, once again, you should trade level by level, but taking into account that this is this 84-cent zone. I am reminding you now, coming here from our previous local top, with also many divergences when Phantom started to reverse in November. So now you're thinking, okay, we are actually retesting. We are retesting the zone. So it's very, very probable that that zone, I can also project right now the volume. So you would see maybe actually a volume shelf on top of that. VRVP, that's going to be a third. That's going to be a third indication for us to consider that this zone can act and provide us a bounce. No, actually, from the volume perspective, that's not so much happening here. It's more like a bit of a dead zone. Yeah, no particular volume information, but we were able to bounce based on a previous support resistance line. So first of all, what do I see? I see, and that's why I have those things. That's why sometimes they make charts a little bit over congested. That's why I'm taking them normally when I do the streams. But when I'm with myself, I see, okay, there are several lines of confluence. There's daily open of today and previous week low at 99, or sorry, at $1. Let's call it $1. Much easier with my previous range. So instead of being a hero and trying to long Phantom somewhere where it is right now, because it's like a gambling. Can it go a little bit down? Can it go a little bit up? What is going to be my conviction? Maybe it does something like that. Maybe it creates a higher high here, and then it dumps down once again, like I was explaining. In the past, that market structure break was just luring the longs in and then was dumping. So I don't want Phantom in the middle of nowhere. I want Phantom to first accept into $1 range, all the way to here. And then I would have a new range to play 1, 2, 3, 4. And then based on all of that, there's so many ranges to play in Phantom. The first range will be 5%. The second range would be around 17%, because we dumped a lot yesterday, guys. The third range would be 25% from now. And then I would have the fourth range, let's say 38% from now. So I'm going to have my TP1, TP2, TP3, TP4, multiple take profits. Okay, Solana. Let's go into Solana. I hope it's clear. So I don't want to create a very poor trade. I'll just gonna portray this trade and you'll see. I don't want to trade something like that where it's gonna have a stop loss all the way to 82 cents and then try to target, my TP1 will be here. So how does that trade looks like? It doesn't look good to me, guys, clearly, because my reward is less than my risk. So instead of trying to create some substandard trade like that, a bit more time to accept here. In this case, my invalidation will be acceptance into the range. And in this case, it can only be 1-2% or more. You know how I trade. I would even keep it manual, and I would go into 5-minute or 15-minute time frame. I would open the chart here, and I would see, okay, if Phantom is clearly printing like it has now, low, high, higher, low, higher, high, higher, low, higher, high, accepts here, creates a couple of things here, and then starts creating its higher, low, higher. Okay, I'm good. If it starts accepting into this range and then does something like that, I don't want to see have the reaction I look on the low-term time frame. And coming back to the previous time frame, you would see I basically have my stop loss very tight, and my take profit here is much, much higher. And so that's already 2.59 to 1. So my risk reward is 2.6 to 1, which is a good trade, and which is actually something. Now, probably you have a question, Russ, but what about long-term entries? Because Phantom is never going to be cheap again at 83 cents. First of all, no, well, there's no such a thing as a fair value in altcoins, right? It's not some balance sheet of the earning generating company that you can analyze. Of course, there are some earnings done on the DeFi protocols and so, but you cannot run the P&L report on this type of companies. So that already makes me very vigilant. I don't want just to buy Phantom because it goes down to 10 cents. There can be infinite amount of new crypto projects coming. So I also don't want to sit on the Phantom for 12 years and expect that this 10 cents can turn into 50 cents at one point. So to answer that, yes, there is this great buying opportunities, and sometimes you can just track them from the top, and you would say, I think we're in a bull market. I think Bitcoin still has to get its parabolic blow off top. I think Bitcoin goes to 120%. And to DCA here, 40% down from the top. This is a good entry point for me, but you need to be very vigilant, because something that went 40% down can go another 99% down, right? We all know that. It doesn't mean that it went 40% down, now it's another only 60 left. No, you can buy and it can bleed down another 99%. But in this case, okay, you just buy here because it's a good discount, but then you cut. So here you buy, and what happens? We already, guys, that's very important actually, because I saw a lot of people, they wanted to buy this entire night and previous night, every night they want to buy something. So it went from 146, it went 33% down, and they start buying here. It's okay, you can try, but then you see we're losing the range and you cut immediately. There's a question to you I want to ask. Will you be able to cut immediately? Would you be on the screen by the time it dips, or you would go to bed and you would wake up and it sells another 20%, you panic and you sell 20% lower at a loss. In that case, if you know that you're going to have this kind of bias, I recommend you to rather play it safe and do like I recommend, just entering the next range and you long it from the next range on acceptance above. Because buying at a discount just because something is 30% down, it's not a good idea if you are not comfortable to cut your loser. And the second downside is because it goes down and you buy here, you cut your loser, you lose 2%, then you do it again, you lose 2%, you lose 2%, you lose 2%, you lose 2%, and maybe here it works. But by the time you actually gonna hold your position, you're gonna lose 1, 2, 3, 4, 5, you're gonna lose 5 times 2%, and only on the sixth time, it's gonna bounce, and maybe it's gonna give you 20%, or maybe it's only gonna bounce 8%, and then you're at a loss. So once again, it's too much of uncertainty, and I don't like to have this uncertainty. I'd rather wait for the reclaim, and then I make my 5% with 80% probability, instead of having 20% up that I would need to cut 5 times 2%, and on top of that, it's not even sure it's going to bounce. So there are different styles of investing, there are different styles of trading, and I'm telling you what works in my opinion based on the track record and also based on observing how people make decisions. Because be honest with yourself, if something have been dropping 5 times and you have been cutting it 5 times, you lose your confidence. You start thinking, I'm doing something wrong. On top of that, you're in front of the screen for 72 hours. Your wife or your partner is already thinking you're crazy. It's so hard to make a right decision because you didn't sleep and people think you're crazy. And on top of that, you keep losing money. So what's the probability that you're going to cut your loser 6 times if it doesn't bounce? It becomes lower and lower each time. And this time, if you're not going to cut your loser and it goes another 20% down, then this whole idea of cutting it 5 times for 2% is completely obliterated, and you basically lost 30% and you are completely ruined. This is not good. This is not good as a trade. So I don't recommend you acting this way, right? And that's the reason I wanted to be as detailed and transparent with you to make you fully understand why I'm not a big fan of just buying something because it went 45% at a discount. Now I see the question of Clean Spark. Maybe because guys, Solana gonna look exactly like that. I can tell you already. Well, I promise. So we're gonna look at Solana very quickly because I understand a lot of questions around Bitcoin miners. I saw in the chat. So Solana, very similar to Phantom. I think it's exactly the same. Of course, I'm a little bit. So I went long here. Why? Well, because of on a 15-minute time frame, the market structure break. I try to long here. It's not good because every time you're gonna lose money. Again, you lose 2% every time. This is not sustainable. So you rather wait. Tony would explain to you, and you long on W. So this is higher than this. So this is a bit like a creepy W. It's an ugly W, but then you long from here because at least you have a higher low. So it's much more safe than trying to do that kind of W, and it keeps deep. Wait for a proper W, as Tony been explaining to you. The W second bottom formation should be above the first bottom formation. So 1, 2, 3, 4. Where's the neckline? Here, nose, neckline, whatever you call it. Bam. This is where you enter. So this is where I entered Solana. You don't need to be a genius to enter that type of trade. But I would not aim here. I would rather wait for a profit. I would rather take profit, partial profit, and then let Solana do its job, whatever it's going to take it, and accept into this range. Maybe it's dry and maybe it dumps. So I good enough for me. The risk reward is bad. So I want Solana to accept here. I rather buy it 25, 30 cents higher. When I see there is a clear positive reaction, I would go on 5-minute time frame and I would see, okay, Solana market wants Solana higher. Buyers are stepping in these levels. And then what I would do, exactly, I would target another 4% move. And that's the point why sometimes leverage is not bad, because having certain 4%, nothing is certain, but 80% probability of 4% move, it's much better than 20 or 15% probability of 10% move. And then what? So if you know that your system works, you've tried it many times, it works, it's okay to add leverage. But first try it without leverage, just try it on spot. So you buy the Solana at 191 when it accepts, and you sell it at 198, and you reward yourself with something. You bring your girlfriend or boyfriend for dinner, you go for like to a cinema. Also, you make some money, take them out, put them aside, reward yourself. You've been doing well. You made a good trade. You teach your body how to positively reaffirm your positive actions, not the actions, when you try to ape into something just because you thought it's now too cheap. But the actions when you make a aware decision with a calculated risk reward, with the balance, with a system that has a nicely tested win rate, and you made money, that's good. So that's well done. Okay, now Clean Spark, and I think that's it. I was on the screen also since very early and very late yesterday. So Clean Spark assignment. Let me see. Well, if I'm okay, are you okay getting aside at $14 strike? So for people who don't understand the options, that you sold your cash secured put with $14 strike, expecting price to go up some way. Not mistaken, from the top of my mind, the implied volatility on Clean Spark right now is maybe something like 138%. So options are so expensive. So with this kind of implied volatility, you probably also already collected the premium of, depending of course on the expiration date, of $2.5. So you have that as cash added to your account. So your real assignment would be 14 minus 2.5. So that's going to be 11.5. So am I fine to get to Clean Spark at this level? Yeah, I'm very fine to get Clean Spark at this level. I'm pretty sure nothing is for certain because there is also a bit of a resistance. But then we can be opening on Monday above that level. So for sure, I'm not going to cut my loss, and for sure, I'm happy to be assigned into Clean Spark in this level. So yeah, that's all good. Valuable information and advice in the heat of the moment, guys. You're very welcome. It's very hard for me when I see that people are suffering, and that's why, for me, it's all about education. It's all about community, and it's all about making aware decisions no matter what market tells you. Of course, macro is not so easy. That's why you always have me. But just trading altcoins level to level, you don't need to panic. You don't need to freak out. Just being balanced, slow. You see, okay, there is a drop coming. I'm not going to burn out my entire portfolio. Maximum what I can lose each time is 1%. I'm just going to take it small, slow. You fail twice for the day. Okay, that's it. You cannot fail 10 times in the day because you just might be wrong that day. Maybe you have a headache. Maybe you had a fight with your business partner. Your emotional awareness is not in place. Don't need to make more trades. Take it as a loss and go for a walk. Yes, for the Bitcoin miners, I'm gonna elaborate. It's a little bit longer. I actually wrote a nice long message. I'm gonna find it out, Toma, and send it. Nice to see you here. And do I short? Yes, guys, I short. Once again, I am macro short on big tech, and at the same time, I'm happy to have those shorts. I do not use stop losses because I have a relatively bigger size of portfolio, so I can add. I still think no matter if Palantir is at 67 or 69, it's quite exuberant. I still think that the correction to 52 or at least 55 would happen. It's just a matter of time. When it comes to crypto, yes, for sure. Guys, the same way Tony was explaining you longs, it's an absolutely same way we're doing shorts. You open you open the crypto project on a short-term time frame, and you just look for W formations. There was so many W's on the way down, but once again, we're still in a bull market. That's why I'd rather give you a teaching or fundamental knowledge behind what makes short a good short. A lot of short alerts in the chat, and then there's a lot of people, they come and they take this short. The type of expansion we're gonna have, they're gonna be obliterated. And if some of those people forget to take stop loss, then they're gonna get wiped out with the entire portfolio. So as soon as I still think we have more room for the upside, I still think that Bitcoin is gonna have a parabolic blow off top. Maybe less parabolic, but 120,000 for me is very, very doable. Starting from the Trump's inauguration, know how new legislation will be pro-crypto. Gary Gensler finally, all these things. I have so many friends from the VC world and from the crypto builders people. They cannot, guys, go on stage publicly because they're American. They don't want right now to be sued. All these people are sitting pretty much on the sideline. They cannot speak about how great. They tried to make it legal. They filed to SEC, and SEC understand how hostile was the crypto environment in the last 4 years, and these people still survived. So yes, I'm very positive on the outlook of what's going to happen right now with the new SEC chair, with the new administration. We're still going to be in a nice run. And this is the reason why I'm not going to put the stop loss, and then they will be obliterated on the way up. Imagine, I showed you in the charts and coin analyze how often people were shorting, and that's the reason why we have probably every pump short, and then they fool the move up. And you see what happens right now. We are finally start to accept into this range low. So the real move is just about to begin. If you took some of it partially on the smaller term time frame or not, that's not important. Don't blame yourself. Be kind to yourself. Be kind to others too. But be kind to yourself if you didn't catch 90% of the move, because if we're going to reverse here, we just play it level by level, and we still have here, and I'm pretty sure a lot of those alts will be much higher. We still have here more than 35% to go just to come back to the levels of where we were before Jerome Powell brought the oil in the fire. Guys, thank you so much, and I wish you an amazing day. And I'm gonna post the recording, and apologize if there is some technical issue. Next time we will resolve it. Much love, and yeah, we'll speak on the chat, and have a good weekend.